And finally, there's some good news for the economy in the July jobs report, which just came out this morning. The U.S. added 528,000 jobs last month. That's more than double what economists were expecting. And the unemployment rate dropped to 3.5%, falling to a pre-pandemic level. Javier David is with us now. He's the managing editor for business and markets at Axios. Javier, I had never thought anything would return to pre-pandemic levels. This is good news. What do you make of this report?
Well, some of the headlines that I've seen this morning, just on the way in, blistering, booming, shocking. Like, there's literally no other way to describe this report. Economics is famous for being sort of on the one hand, but on the other hand. But in this case, there's absolutely no other hand. There's really no way to describe just how good this report is. The strength was broad-based. The fact that we're back to pre-COVID levels of employment, despite all of the doom and gloom about the economy, this is a report that's really sort of knocking everyone's socks off.
I heard quite a few people around here say, wow. How could the unemployment rate impact inflation?
Well, it means that people are employed or gainfully employed. One of the components of the report showed that people are earning more, so that means more spending, and more spending means more demand. More demand means prices are likely to continue to climb, and this is a concern for the Federal Reserve because they kind of want inflation to come in sharply. They also kind of want employment and the fact that people are spending so much to also sort of tamper down. So to be honest, it's a great news if you're looking for a job or you want a job, but the federal report is going to have some angst, a little bit of angst about this, and it's more than likely to make them even more aggressive in their effort to tame inflation.
I was going to ask, on the point of the Fed, what might we expect at this point?
Well, at this point, we're probably going to see another 75 basis points or 3/4 of a percentage point at the September meeting. Maybe they might even go a little bit more aggressive. Last meeting, there was some talk that they might even do a full percentage point. I think they want to be deliberate in their approach, but they have indicated that they are very serious about bringing down inflation, even if the market has been trying to sort of game them into easing because there's all this talk about recession. We've had 2 consecutive quarters of negative growth, and regardless of how the Biden administration wants to paint that has always been the technical definition of recession. But the 2 things can be true at once. We can have 2 consecutive quarters of negative growth, but these employment figures that we're seeing, the spending, the consumption, the inflation, the demand in the economy are completely inconsistent with what we would consider recession. And that's why those of us in the media business have been having such a hard time defining recession, because this isn't the typical recession.
And no one wants a recession, of course. The report also shows hourly wages increased by about 0.5 percentage point. How is this impacting major purchases like houses?
The funny thing is people are opting, they're doing less sort of hard physical goods shopping, so there was less activity in the housing sector, even though these numbers simply go in the opposite direction. But people are doing less sort of buying of things, and they're going out. So we're seeing inflation is changing the behavior in the way people are sort of spending. They're kind of downgrading from things that they usually buy. And they're doing less shopping of like TVs and home goods and home furnishings. The home ownership market is really cooled because mortgage rates have shot up. Yeah. But in general, consumers are getting out and doing more. They're traveling, they're going on vacation, they're taking flights to see family or whatever it is that they want to do. And that is a good news story for consumers, but it's also a bad news story in terms of inflation because it means demand is still very strong.
Everyone trying to live pre-pandemic life, too. Javier David, thanks so much. It's great to see you here in person.
Thank you.